Good morning, students. Myself, Karthiyayini, Assistant Professor, Department of Commerce with Finance, Dr. S.N.S. Rajalakshmi College of Arts and Science, Coimbatore. In this session, we are going to discuss with single entry system and relates with one problem. First of all, to know what is single entry. There is no system of accounts called single entry system. There is no system of accounts called single entry system. It is otherwise called as the incomplete record. To see one businessman record his business transactions in an unsystematic manner. That means he does not follow the rules of double entry system. So we know in double entry system, debit and credit aspects of each and every transactions. But here the businessman does not follow the double entry system. So this method is called as the single entry or incomplete records. In single entry transaction, it is most suitable for small traders. Under single entry, only personal accounts, cash accounts and some notes are maintained. So single entry does not mean that there is only one entry for each transaction. So in fact, single entry is a combination of double entry for some transactions like cash collected from debtors, single entry for some transactions like cash sales, and no entry for transactions like depreciation. So see, single entry does not mean that there is only one transaction. There is only one entry for each transaction. So it is a combination of double entry, single entry and no entry. To see the definition, according to Orr and Carter, single entry cannot be termed as a system as it is not based on any systematic system like double entry system. Orr and Carter define single entry cannot be termed as a system as it is not based on any scientific system like double entry system. For this purpose, single entry is nowadays known as preparation of account from incomplete records. Let us discuss silent features or characteristics of a single entry system. Features or characteristics of a single entry system. So let us quickly understand. The first one is absence of uniformity. Absence of uniformity. So this is the system but not a method of accounting. The system is different from firm to firm as it is maintained according to the requirement and convenience of the organizations. Here there is no uniformity. So this is the system but not a method of accounting. The system is differ from firm to firm as it is maintained according to requirement and convenience of the organization. It is the highly flexible according to the capabilities of individuals maintained the records. Then second one is records maintained. Here personal accounts are fully written and cash book also maintained. So under single entry, so personal accounts and cash accounts are maintained. So nominal accounts and most of the real accounts are completely omitted. So records maintained under single entry systems are Personal accounts and cash accounts are fully maintained. Then nominal and most of the real accounts are completely omitted. Next one is the mixing of transactions. Business dealings as well as personal transactions are mixed while writing the cash book. So here business dealings as well as personal transactions are mixed while writing the cash book. Then suitability. So single entry is mostly suitable sole traders, partnership firms and professionals. So joint stock companies have to follow double entry systems. So suitable. So in single entry system, mostly suitable system for small traders only. Then dependence on original vouchers. Dependence on original vouchers. Due to non-systematic recording, the trader has to depends upon the original sales and purchase voucher to ascertain total credit sales and total credit purchases. So due to non-systematic recording, a trader has to depends the original vouchers to ascertain the credit sales and credit purchases. So it is always depends on the original vouchers. Then finalization of accounts. So here final accounts cannot be prepared. So profit and loss can be computed in a crude way, so which is not a reliable one. So finalization of accounts. So regular final accounts cannot be prepared. So profit and loss can be computed in a crude way, so which is not a reliable. So these are the features or characteristics of a single entry system. Then move to the disadvantages or limitations of single entry system. Disadvantages or limitations of single entry system. So to discuss one by one. So the first one is insufficient record. Except personal accounts and cash accounts, all other impersonal accounts are left out. So the accounts serve very little purpose. So it is called as the insufficient records because except personal accounts and cash accounts, all other impersonal accounts are totally avoided. So it is called as the insufficient records. Second one is the absence of trial balance. So trial balance cannot be prepared for any period. So automatically arithmetical accuracy of the accounts cannot be verified. So absence of trial balance, that means trial balance cannot be prepared. So automatically arithmetical accuracy of the accounts cannot be verified. Next one is difficulty in ascertainment of profit. See, absence of record for expenses and incomes makes it is impossible to ascertain profit. So we need expenses and incomes for finding the profit, but in a single entry, absence of record for expenses and incomes, so it is automatically makes impossible to ascertain the profit in reliable way. Then fourth one is difficulty in ascertaining financial position. Again the same, the absence of real accounts, a balance sheet cannot be prepared to assess the financial position of the business. So absence of real accounts, balance sheet cannot be prepared. So without balance sheet, the assessment of financial position is impossible. Then lack of statistical data. Statistical data relating to increase or decrease in sales, purchases, different items of expenses, profits cannot be obtained. Lack of statistical data, that means statistical data relating to increase or decrease in sales, purchases, different items of expenses, profits, etc. cannot be obtained. Encouragement to fraud. So fraud, embezzlement, etc. by employees cannot be deducted. So under single entry, so fraud and embezzlement by the employees is always possible. That cannot be deducted. A rectification of errors is difficult. So there is no cross verification system like trial balance to deduct mistakes. So rectification of error is rare in single entry system. A value of business cannot be ascertained. It is difficult for the owners to assess the value of goodwill of the business in the absence of proper records. In single entry, there is no the proper records, so it is difficult for the owners to assess the value of goodwill. So planning and decision making are difficult. The owners cannot plan for future operations and growth, etc. of the business in absence of reliable information. So the owners cannot plan for future operations and growth of the business in the absence of reliable information. Difficulty in getting institutional loans. Again, commercial banks do not accept incomplete records as basis for extending credit. So these are the disadvantages of single entry system. Next, so problems in single entry system. Ascertainment of profit. So when business records are incomplete, profit or loss can be found through any one of the following two methods. So here, when business records are incomplete, profit or loss can be found through any one of the following two methods. The first one is the net worth method and conversion method. Net worth method and conversion method. To see the first we discuss with net worth method. So now to see problems relating with a single entry system under net worth method. So net worth method, this method is also called statement of affairs method because net worth is ascertained with the help of the statement of affairs. So under net worth method, opening capital to compared with the closing capital to find out the profit or loss. So under net worth method, opening capital is compared with the closing capital to find out the profit or loss. To see steps to find out profit or loss under net worth method, step 1 is calculating opening capital. Step 2 is ascertainment of drawings during the year. Third step is ascertaining capital introduced during the year. Step 4 is computing closing capital. Step 5 is preparing statement of profit. Then format. So format under net worth method. Statement of profit or loss for the year. So the format starts with a opening the format it starts with the closing capital plus drawings. Then to subtract additional capital introduced. Then again to subtract opening capital. So the final value is either net profit or loss for the year. Once again, I'll explain the format of statement of profit or loss. It starts with the closing capital plus drawings less additional capital introduced. So we get one value. That value is called as the adjusted capital. So adjusted capital is important one. That value is adjusted capital. Again we have to subtract opening capital. See Adjusted capital is more than the opening capital, we get net profit. Adjusted capital is less than the opening capital, we get loss. Okay, so this is the format. Then to see one illustration problem, find out profit from the following data. So capital at the beginning of the year 8 lakh. So this is the opening capital. Drawings during the year is 1,80,000. Capital at the end of the year is 9 lakhs. Capital introduced during the year is 50,000. So from the above information, we have to find the either profit or loss. First, write the heading, statement of profit or loss for the year ended. So it starts with the closing capital. To write, closing capital of the firm is, capital at the end of the year is closing capital. So closing capital at the end of the year is 9 lakhs. Then we have to add drawings. To write, add drawings. So drawings during the year is 1,80,000. To write 1,80,000. Closing capital plus drawings, it comes 10,80,000. 10,80,000. Then we have to subtract additional capital introduced. Additional capital less additional capital. Additional capital in the problem is 50,000. See in the last line, capital introduced, that is the additional capital, is 50,000. So we have to subtract 10,80,000 minus 50,000. It comes 10,30,000. So this 10,30,000 normally we called as adjusted capital. Adjusted capital. So adjusted capital equal to 10,30,000. Again we have to subtract opening capital. So opening capital, see opening capital in the first line, capital at the beginning of the year is 8 lakhs. Opening capital is 8 lakhs. See adjusted capital is 10,30,000. Opening capital is 8 lakh. Adjusted capital is more than the opening capital, means we get the profit. Sometimes adjusted capital is less than the opening capital, that time the company incurred loss. Okay, so here adjusted capital is more than the opening capital. So the difference value is 10,30,000 minus 8 lakhs is 2,30,000. So 2,30,000 is the profit. Asma, hope you are all understand well. That's it. So in next class we will discuss the some other problems in the same method. Thank you, ma'am.